data that we just got and its impact on the Fed's thinking. Let's bring in former Dallas Fed President Richard Fisher. He's a senior advisor to Barclays, serves on the board of Tenet Healthcare and Warner Brothers Discovery, and as a CNBC, most importantly, and as a CNBC contributor. Does that go ahead of the Dallas Fed stuff at this point? Probably. But equal billing right at the top, right?
CNBC definitely at the top.
We haven't talked in a while, Richard. What are you, everything that the Fed has done and said, do you have a problem with any of it at this point? How are they doing? What kind of grade?
I think they're doing well. They made a mistake. We've talked about this before, Joe. That is embracing this transitory argument, which is silly. The horse is out of the barn argument that I call it. Having to corral inflation now, bring it back. It's way out in the pasture. They've been bringing it back in. I think they moved quickly, but very importantly, in terms of evaluating how they're doing, they've been telegraphing everything. We already know that at this coming meeting, it would be a quarter point. It's already been leaked out to Nick Tamaris at the Wall Street Journal. He's the Fed whisperer. And we're hearing the different bank presidents and governors speak the same tune. So I give them credit for being transparent, not hoodwinking the market. And I think we're likely to have, obviously, another quarter point increase.
Yeah,
the question is, what happens after that? And
yeah,
how do they react?
Given the economy and the numbers that we're seeing, and we get mixed things. Sometimes the economy looks pretty good. Other times it looks like there are some cracks. Do you think they need to go as high as they said? Can they do it with words still? If they say 5 1/4, can they just say it and they don't actually have to get there?
Well, Ben Bernanke used to say words are as powerful as policy itself. I think he's right. We'll see what they say after this meeting at the end of the month. And I would assume they'll still be determined, Powell will be determined to be forceful because he doesn't want to have 2 errors in a row, I would guess. The second error would be stopping early, having inflation continue on, not coming back towards the 2% target. Now, the numbers we just got today, Joe, I like to say that instant analysis is an oxymoron. It's too early to really, I need to spend some time, as did Steve Leisman, who mentioned time to look at the data. But the market reaction has been bland, and we'll just have to see what they can sort of deduce by studying the entrails of these numbers, and I'm sure they're hard at it as we speak.
Do you think that the 2-year and the 10-year will get in line finally with what the Fed is saying, or do you think the Fed comes down to where the 2 and the 10-year? There's some weird disconnect there, Richard. How do you explain it?
Well, I mean, we've had this inversion for quite some time, Joe, and everybody's been saying this is a harbinger of a recession. The 10-year has come down from a high of, 430, has been down and then back up. It's bopping around the 3.5 level. The 2-year's held fairly steady, although it's come off as well from almost 4.7.
It's nowhere near 5%, Richard. I mean, it doesn't.
I agree.
And 3.5 on the 10-year, that's not where it should be if the Fed is really going to do what it says it's going to do. Somebody's lying. Either the market's lying or the Fed is lying.
Well, I don't think the market lies, and I don't think the Fed lies. And I think, look at the demand for treasuries, Joe. Central banks have been, particularly the Chinese, the Japanese, have been reducing their holdings. But through the Cayman Islands and the UK banks, we're seeing a lot of private money, probably hedge fund money and other money, flowing into the 10-year, flowing into the 1-year, flowing into the 2-year and the 5-year notes. So I'm not surprised to see where these levels are trading. And I don't think they're telling us as much as economists impute into this inversion.
Richard, if inflation is a global problem, does that vindicate policymakers here and the Fed here? Did we, in the 2 years prior to the pandemic when we were spending, which people probably say we needed to, but then we spent a lot afterwards too. Are they vindicated, or at least without blame? We just had the Assistant Treasury Secretary saying it's a global phenomenon, inflation. It had nothing to do with money printing or profligate spending by the Biden administration.
Well, I disagree with that, but without trying to be at all partisan, so I'm not a member of either party. I would just say that you have to put it in perspective, Joe. When the Cold War ended, since then, the equivalent of $17 trillion has been saved in terms of what we spent on defense. We're now ramping up again, and we replaced a lot of that $17 trillion with social spending and infrastructure spending and all kinds of things that government loves to spend money on. So here's what I'm worried about, or I'm concerned about, and want to see better analysis. Every country in the world is going to float more paper. We'll probably have $1 trillion, $1.5 trillion more treasuries coming into the market. Fed's reducing its balance sheet. We have deficit coverage at these higher rates. And every government, Japan's doubled their spending on defense, becoming offensive rather than just purely defensive, having that capacity. The Europeans are going to have to float more bonds in order to finance their fiscal spending, which is driven heavily by defense spending. Who's going to buy that paper? At what price? We have yet to see it. So I think this, in a way, Joe, puts a floor on where yields might go. And I'm not surprised to see them hold up the levels they've been holding. Even if they've come down, they're still at very high levels.
What do you think, if we do go higher and the Fed keeps going up, what's the deficit going to be this year, and how much are we going to be paying in additional interest expense? And what does that mean for GDP this year, next year, the year after? Are we going to be permanently muted by spending so much just covering what we've already spent, the interest?
I think the cost of carry now is, what, $800 billion? It's a big number.
Yeah.
And these interest rates, remember Janet Yellen? I know you're critical of her, but she was right when she said, go big. That was when rates were down at the 1% level. I wish the government had locked that in. Now the rollovers are coming, and the rollovers are coming in the 4% range and slightly less. That changes the whole equation, Joe. And more deficit spending means a higher cost of carry, and it elbows out the need for ramping up defense and other spending that the government has. So this whole debt ceiling crisis, as they call it, I'm sure they'll agree to the debt ceiling. The question is, what kind of spending do we carry forward, and where can we cut? Because the cost of carry has gone, almost tripled since the big numbers started coming out on the infrastructure program. This is a real challenge, Joe, and I think it puts a floor on rates, regardless of where the Fed funds rate is.
Right. All right, Richard, sorry about the, did you really think the Cowboys were going any further than that? I'm not sure. What would you do? What would you do at this point? I don't know. It's Jerry Jones is, what would you, seriously?
Jerry prized all the way to the bank. The guy's a financial genius.
Oh, it's about money. Yeah.
I would get another quarterback. I mean, Dak's one of the nicest men, great in the locker room, has just been a terrible disappointment, very uneven performance. And I think it's time to get some new players. And I hope they do a good job. They're going to have to spend. They locked these guys in for an awful lot of money, including the quarterback.
They locked Dak in for an awful lot of money, didn't they?
Exactly. And I think that's going to be a real problem meeting their payroll.
Well,
but it's a great franchise, and he is a remarkable financially, Joe, and particularly his daughter who runs the business, yeah. Charlotte, the brains in that family, in my view. Together, they're a dynamic duo. How's that?
Jerry's got no brains? I don't know. So that's the only person with the brain. Okay.
No, I mean,
you're not sitting in that box anymore. All right.
No, Charlotte controls who sits in the box. Hello, okay. Charlotte.
Oh, my God. Okay.
Okay.
Glad we could help. Glad we could help. See you later.
Okay. Coming up, Jim Cramer's first take on the trading day ahead. We'll talk to him in just a moment. Take a look at the futures, though, right now. We've got some interesting stuff going on. We're going to talk to him about Salesforce and whether this new news about the board is going to change the game with Elliott Management or not. You're watching Squawk Box, and this is CNBC.